Good morning, everyone. Thank you for joining us for today's webinar, Understanding and Implementing New Federal Funding Guidance. My name is Laurel Dobbin. I'll be your moderator today, and I want to go over a couple housekeeping items with you before we get started and hand it over to our presenters. First up, using your webinar pane, you'll see your webinar pane in front of you. Please note the orange arrow on the left will allow you to minimize or maximize the pane. If it's minimized, simply click on the orange arrow to bring it back. And feel free to submit questions throughout the webinar using the question box, and our presenters will handle those questions at the end of the webinar if time permits. Otherwise, they will follow up with you after the webinar to answer your questions. For your audio settings, if you're using your telephone to listen to our webinar today, please make sure you select Use Telephone. If you're listening through your speakers, please use the Mic and Speakers button. And if you have incorrect settings on those, they will produce an echo sound, so make sure you have the correct setting. To qualify for California CE for today's webinar, you must do the following. Use a personal computer and log in with your own information and unique URL. Be logged into our online software for at least 50 consecutive minutes within the scheduled time frame of the webinar. Actively respond to at least 75% of the polling questions, and complete the evaluation survey at the end of the webinar. And now I'd like to introduce our presenters today. First, we have Grant Lamb, who's an audit partner at Armanino. He specializes in single audits and works extensively with nonprofit organizations. He's a member of our firm's technical committee, AICPA and CalCPA. Karen Frost is a senior manager with our financial management outsourcing group. She has over 30 years of accounting experience, specializing in nonprofit for more than 15 years. She's a member of the American Institute of Certified Public Accountants and the California Society of Certified Public Accountants. Now I'll hand it over to Grant, who's going to go over our learning objectives for today. Grant?
Thank you, Lauren. Good morning, everyone, and thank you for joining our webinar today. Karen and I are very excited to put this webinar on. The past few years when we've delivered this webinar, we've talked about the proposed changes. We've talked about the upcoming changes that you need to be aware of and start planning for. Those changes are now in effect. They're now here, and if you are a recipient of federal awards, you need to be aware of what these changes are, what the new guidance says, and what you need to do to start complying with these new requirements. There's a lot of information to cover today, so let's jump right into it. As far as our learning objectives, we will focus on the changes to the administrative requirements and the cost principles. The OMB categorized the reform into three main areas. There's admin requirements, cost principles, and single audits, and different parts goes into effect on different days. So for this webinar, we will be focusing on the changes to the administrative requirements and the cost principles. Specifically, we will be looking at how the new rules impact compensation reporting, subrecipient monitoring, and indirect costs. The changes impact all areas of the guidance, but these are the areas that we feel will have the most impact to our clients and will have the most impact to recipients of federal awards. We'll also look at internal controls. It's a very important part of the guidance. The core principles surrounding internal controls haven't changed, but the OMB is placing much more emphasis on having sound internal controls. So we'll talk about what that exactly means. And throughout the course of our webinar, we'll also provide best practice recommendations and tips on implementing and understanding the new controls or the new guidance. As for the format of our webinar, we've organized our webinar into three areas. First, we'll look at the objectives of the reform. So we'll discuss the OMB's goal in implementing the reform and what led to that change. And then we'll talk about the effective date. Different parts of the guidance goes into effect on different days. There's been some confusion as to when certain parts of the guidance comes into effect, so we'll provide some clarity surrounding the effective date. And then we'll go into their recent changes. So we'll talk about internal controls, we'll talk about compensation reporting, indirect costs, and subrecipient monitoring. Again, these are the core areas that we feel will have the most impact. And then we'll talk slightly about the single audit changes as well. Then we'll wrap up by going through our recommendations and action items for understanding the new guidance and how to implement the new guidance.
Thanks, Grant. So the objectives of the reform. I know it may seem humorous, but the federal government actually did want to improve the integrity of the financial statements, strengthen the accountability, and minimize time spent used in complying with it. It does seem awkward, but they know and heard from the community of nonprofits and schools and grant recipients that it was confusing, if not cumbersome, to have all of the regulations in different areas, have definitions in different areas, have one person, one agency being inconsistent with another agency. So they are really trying to refocus everything onto be more accountable for how the government's money is being spent in more efficient ways and focusing much more on the results and performance outcomes. They've even changed, as Grant's going to tell us about, how the auditors are supposed to be looking at this as well, and that they're going to be relying on the auditors more. So it's a refresh to have it being focused on the outcomes and the results and not necessarily on the, are you using the right form at the right time at the right check mark. So it's a rather refreshing reform. And this can actually be seen that they have accomplished that, because one of the favorite things for me, at least, Grant, I don't know which one of the new reforms is your favorite.
I like all of them,
There
Karen.
you go. They're all, it's like your children. You can't say which one's best, huh? But 2 CFR 200, which is the new reform, Section 407 is a full list of prior written approvals. So before, we had to know where in the circulations, and you had to research it to see if you needed prior written approval for something, or, God forbid, you asked your grantor if they needed a prior approval for every little thing to be sure that you were okay. Right now, there is a list of all of them. It goes from A through V of any time that there may be a requirement for prior approval. So if you're going to do any of these actions, you can check the list, look at that part of the regulation, and know for sure if you need prior approval. So to me, that is one huge step forward.
Okay, we're going to jump right into polling question number 1. Please remember, for CE credit, you'll need to answer 75% of these questions. Our first question: the recent reforms to the administrative requirements, cost principles, and audit requirements are effective at what date? A, December 26th, 2013, B, December 26th, 2014, C, December 31st, 2015, or D, it depends. And just as a reminder, I forgot to mention this in our introduction, we will be sending out the PowerPoint and recording of today's webinar after the call. You should get it within 48 hours of today's webinar. Votes are coming in. I'll give you a little bit more time to submit your answer, and then we'll give you the correct one. Okay, polls are closing in 3, 2, 1.
We have a little preview of it while we're waiting for you guys to see it. So Grant, 57% said December 26, 2015.
So that's actually somewhat of a trick question. Technically, the answer B is correct. The correct answer would be it depends. The changes to the administrative requirements and the cost principles goes into effect December 26, 2014. The changes for the single audit reform actually takes effect December 31st, 2015. That leads us well into our next slide, which we talk about the effective dates. So the reform is effective now for federal agencies, and for non-federal entities, that would include all recipients of federal awards. The new administrative requirements and the cost principles goes into effect now for federal awards made after December 26, 2014, and to additional funding to existing awards made after that date. So if your organization received a new award after December 26, 2014, or if you received additional funding to your existing awards since December 26, 2014, then those new awards and those additional funding would be subject to the new administrative requirements and cost principles. With respect to the single audit, so that takes effect for single audits of years beginning on or after January 1st, 2015. So if you are a calendar year end, the first fiscal year that the new single audit rules would apply would be December 31st, 2015. If you are a June 30 year end, then the first fiscal year that the new single audit requirements would apply would be June 30th, 2016.
So that means right now in 2014 you could be riding the fence because you'll be going through the audit under the old regulations, but yet your 2015 expenditures will be under the new regulation.
That's right.
Okay, just making sure I was confused with everyone else.
So throughout the course of the guidance, you'll see uses of the terms must and should, and that's led to some confusion in the grants community as to what each really means. So to provide some clarity, must means must. Must is a requirement, you have to do it, and there's no way around it. Should means it's recommended. It's technically not a steadfast requirement, but it serves as a best practice recommendation or serves as a benchmark for how certain controls should be set up or how certain processes and procedures should be established. So keep that in mind as we go through this webinar and as you read the guidance, that certain requirements, certain areas are must areas and certain policies and procedures are should areas. Also should mention that recently the OMB issued an update that revises several requirements from should to must to provide better clarity. So as I mentioned earlier, there's three main categories of reform. There's the administrative requirements, which includes the pre-award and the post-award periods, and it covers how awards are granted and the administrative requirements that are necessary once the award has been awarded. The cost principles, very important area, and it essentially provides guidance on how to account for costs funded through federal dollars. These are the two areas that are in effect now, so we will be focusing our webinar on administrative requirements and cost principles. The third area of reform is auditing requirements or changes to the single audit process. Very significant changes to this process. Many of the changes impact how we as auditors carry out our single audits. Won't have a lot of impact to the grant recipient except for a few key areas that will significantly impact grant recipients. So let's talk about some of those areas. But with that, let's start by looking at the changes now in effect for administrative requirements.
So in the administrative requirements, we used to have, as I said, conflicting, duplicate, multiple places for the guidance, and they took 8 different circulars and took them down into, some people were calling it the super circular, the omni circular. I think it's going to get named pretty quickly just as 2 CFR 200 and go forward from there. So these are the old circulars. You had 3 of them for administrative requirements, 3 of them for cost principles, and 2 of them for audit requirements. Why 3 for administrative, people might ask? 1 is for universities and higher education, 1 is for government and tribal, and 1 is for nonprofits. So each one of the administrative requirements and cost principles were unique to the type of grantee that was getting the money from the federal government. The A133 pretty much was the audit for everybody, so that was easy to do. The A50, of course, is for the tribals, and all of these things have been combined into one new area. It's been streamlined, and they kept the streamlining process and the logic process in place. So the first thing that you have is acronyms, then into general provisions, then as Grant said, the administrative requirements to the pre-federal award and the post-federal award. Section 400 is going to be a huge section, popular for everyone. That's the cost principles. Still has the indirect portion and then all the list of all the lovely different cost principles and how they are done. And then the section 500 is the audit requirements, which right now is rather thin because they'll be putting the annual compliance updates there each year. But there's a logical path for it. All the acronyms and definitions are in one place now, so you don't have to search through the A102, the A89, or the A110. It's all in one place. There's still, when you're reading the definitions and reading through the regulations itself, they still will have sections that are for universities and colleges and higher educations, some that are specifically for nonprofits and some that are specifically for governments, but it's all in one area so that you can read the definition in its entirety for that type of an award or thought process and get it in one place. And I think that leads us to our second polling question.
That it does. All right, our second polling question should be up on your screen momentarily. The previous 8 circulars have been codified into one document. Is that true or false? Or if you're not sure, you've got an option there with C. Just a reminder, you can submit questions throughout the webinar in your box on your webinar pane, and we'll be happy to answer those questions as time allows at the end of the webinar. Looks like votes are coming in. We'll give it a little bit more time for those of you who haven't submitted your vote.
Oh, we're getting a higher percentage of voters this time.
People are waking up.
You don't have to answer it right or wrong. You just have to participate to get your CE.
That's right. All right, we're going to go ahead and close the polls in 3, 2, 1.
Well, Grant, it looks like a lot of them were listening and heard that there were 8 circulars that boiled down into the new 2 CFR 200. True is the correct answer. Now we get to move on into an auditor's favorite portion, internal controls.
That's right, Karen. Thank you. So moving on to internal controls, the first thing is that the section on internal controls was previously located in the single audit section. It's now been moved to be included as part of the administrative requirements section. As Karen mentioned, that's section 200. And the idea by moving it to the front of the guidance is that the idea is to emphasize having strong controls at the start of the award process. Okay, this is a very important area. All grant recipients should read and understand the section on internal controls and understand how it applies to your organization and your federal awards. It's not a very long section, but it contains very important information. As I mentioned earlier, the core principles surrounding internal controls haven't changed. You still need to have controls. They still need to be operating effectively, but the OMB is now placing much greater emphasis on having sound internal controls. So what does that mean? Well, first, the guidance states that you must, so there's that word, you must establish and maintain effective internal control over federal awards. So that means your controls need to be designed and operating at a level that they're providing reasonable assurance that your organization is managing your federal awards in compliance with the federal regulations and the terms and the conditions of the award. And we'll go into more detail on a later slide as to what that it means. But also want to mention that the guidance states that your controls should be in compliance with Green Book and COSO. So there was some confusion when this first came out as to whether or not they have to be in compliance with Green Book and COSO. So to clarify, there's technically don't have to be in compliance with Green Book and COSO, but they should be, and it provides a framework for how your internal controls should be established. And COSO is the Committee of Sponsoring Organizations of the Treadway Commission. They issued the Internal Control Integrated Framework. So Green Book and COSO provide 2 standards for establishing the framework of your internal controls.
So they were doing a nod to best practice there to help clarify what internal controls should be.
Exactly, exactly.
Okay.
So on the next slide, we'll look into the specific requirements you must have surrounding internal controls. So first, you must evaluate and monitor compliance with the terms and conditions of your federal awards. So what does that mean? To me, it means as a grant recipient, you have to understand the compliance requirements as they pertain to your federal award, and you have to have a process in place where you're evaluating to ensure that compliance requirements are being adhered to. So I would recommend all grant recipients go through your federal awards, identify the applicable compliance requirements, and then look at your controls and think about, are they set up at a level that they're providing reasonable assurance that compliance requirements are being adhered to? So for instance, cost allowability, that's always an applicable requirement. What controls do you have in place to ensure that only allowable costs are being charged through to the award? And that's the control that you need to have established and documented. The guidance actually doesn't state that this has to be documented, but I highly encourage you to document both what your policies and procedures and controls are surrounding certain compliance requirements, number one, and number two, also document your process for evaluating and monitoring compliance. The guidance also states that you must take prompt action on audit findings. So this means meeting with your auditor or meeting with the federal funding agency that issued the finding, understanding the finding, and taking action so that, number one, the finding is remediated, and number two, controls and processes are put in place so that the finding does not occur again. And again, because this is a must requirement, I would recommend that you document whatever action you took to follow up on your findings. The guidance also includes new language pertaining to the safeguarding of personal and sensitive information, and it states that you must take reasonable measures to protect sensitive information. So this is of particular importance to organizations that deal with patient files or participant files or files that contain private and confidential information. You must have controls in place to ensure that these files are protected and safeguarded, and if applicable, in compliance with HIPAA regulations. Organizations that maintain these files electronically, highly recommended you work with your IT team or your auditors to help look at the IT controls and making sure that controls are in place to safeguard the sensitive information, because it is a requirement. So now is really a good time to revisit your internal control environment and ensure that effective policies and procedures are in place surrounding the management of your federal awards, and you have documentation of what your controls are. Many times when I work with organizations and I go out to perform the single audit, I find that they have really good controls surrounding their non-federal activity. So they have really good controls surrounding cash disbursements with respect to segregation of duties and checks and balances. There's good controls surrounding cash receipts and payroll. But sometimes the controls are lacking as they pertain to the federal award activity. By that I mean organizations don't always have documented controls, and they aren't operating with respect to your applicable compliance requirements. So, what controls do you have in place to ensure that only allowable costs are charged through the award? If subrecipient monitoring is a requirement, what controls do you have in place to ensure that you're performing your requirements to monitor your subs activities? Or what controls do you have in place to ensure that the required reports are timely and accurately filed? So these are the areas that the OMB is going after or getting after in the new guidance. And as part of the single audit, we audit both the compliance attribute and the internal control over compliance. We look at both pieces. So it's very important for organizations to have these controls in place and documented surrounding compliance. Okay, so next we will look at subrecipient monitoring, which is another very important part of the guidance. So first off, the new guidance includes revised and clarified guidance surrounding subrecipient monitoring. So this is of particular importance to organizations that are either subrecipients or pass-through entities. Real quick, there's clarified guidance between the relationship between two parties. The term contractor replaced the term vendor. In the old guidance, there was a section on subrecipient versus vendor determination. So it changed the word vendor to contractor. The criteria for determining if you are one or the other hasn't changed, but it still depends on the nature of the relationship. Sometimes I'll see agreement and it's called a contractor agreement, or it might refer to a party as a contractor. It doesn't necessarily mean that they are a contractor that's exempt from federal funding assistance. So it all depends on the nature of the relationship.
Grant, so this is similar though to internal controls, where prior to this it was actually in A133 some suggestions on best method of subrecipient monitoring, because in the circulars it just said thou shalt monitor your subs, but it was in A133 where some of this was. So they've taken it out of the audit requirements, and like you said with internal controls, moved it up into the regulations. So you're starting to do this when you're actually starting to engage with your sub and know to do this from the very beginning, not as an afterthought when you're prepping for audit.
That's correct. The idea is to have stronger controls and stronger policies and procedures in place at the start of the award process and not at the end of the award process. Okay, so now we'll look at the responsibilities of the pass-through entity and the subrecipient. And just to clarify, the pass-through entity is the organization that receives the money from the federal agency or from another organization and passes it through to another organization. And that organization that receives the funds is known as the subrecipient. So there's certain things that a pass-through entity must do. The pass-through entity must include specific information in the subaward. The specific information includes the indirect cost rate, the CFDA number, the DUNS number, the federal program name, and the terms and conditions for closing out the awards and other pertinent information. It seems like a fairly straightforward requirement, but I do come across from time to time subawards that don't contain this relevant information. We're left having to track down this information. So if you are a pass-through entity, I recommend you go through all your subawards, read through these subawards, and make sure that it includes the necessary and required information.
And again, like the written prior approval, there is an actual list of what those federal award identifications are that must be, as Grant said, included in it. There is a list in the section 200-330, so it's clear, it's easy. You can pull that list and just make it a check mark list to be sure it's in everything that you issue.
Exactly. One of the other requirements that the new guidance puts out is that the pass-through entity, if you have any additional compliance requirements, that you need to clearly communicate that to the subrecipient. So if you're imposing any new or special requirements, make sure it's clearly communicated to the subrecipient and they're aware of what they need to do with respect to that compliance requirement. With respect to the indirect cost rate, this is an important area and it's garnered a lot of questions in the grants community. But as a pass-through entity, you must provide an indirect cost rate to your subrecipient. So that rate can either be an approved rate that the subrecipient already has with the federal agency, or if no such rate exists, that rate could be a rate that you, as the pass-through entity, has negotiated with the subrecipient, or if there's that negotiation process doesn't occur, it needs to be at least the 10% de minimis rate that the subrecipient can elect. But the bottom line is, as a pass-through entity, you have to provide your subrecipient with an indirect cost rate. As a subrecipient, you have to make your records available for inspection as part of the subrecipient monitoring process. So those are some of the general requirements that I talked about. On the next slide, we'll look at some of the more specific requirements surrounding the subrecipient monitoring process. Okay, so as part of the subrecipient monitoring process, a pass-through entity must do two things. You must evaluate the risk of noncompliance, and you must monitor the sub's activities. It's important to note that there's two parts to this. One, there's a risk evaluation piece, and number two, there's the actual monitoring of the activities. And the objective of the risk evaluation is to determine the appropriate level of subrecipient monitoring. So they really want you to understand your subrecipient, understand where the risks are, and that will help you develop what level of subrecipient monitoring you need to establish. But what does evaluating risk mean? So that means looking at the sub's prior experience with subawards. Are they a first-time recipient, where that will make them a higher risk sub, or have they received awards in the past, where you could reduce some of your subrecipient monitoring? Look at the results of past audits. Have there been any findings? If there are findings, then you know where the risk areas are, and that might elevate the organization as a whole to a higher risk area. If they're clean of findings, they could be a lower risk subrecipient for you. Look at changes to personnel or systems. Has there been turnover? Has there been significant changes to the administration of their federal awards? All these factors are factors that will increase the risk and will increase the amount of subrecipient monitoring that you need to carry out. Look at the results of any external federal monitoring. Has the subrecipient been examined by federal agencies before? And what were the results of those audits? So take that into mind as well as you're performing your risk assessment. So what are some of the best practice recommendations if you are a pass-through entity to perform your evaluation of risk? First off, since you must perform the risk assessment, I recommend that you document your policy for performing the assessment. And once you've performed your assessment, document the results of your risk assessment so there's proof that the risk assessment occurred. If you have many subrecipients, I would recommend creating some sort of risk assessment matrix that you can use to evaluate and document risk. We use this on all of our audits, is the risk assessment matrix, where we assess the risk of the client. Very similar approach, and you as a pass-through entity is to establish some sort of matrix. I'd be more than happy to help anyone out there establish this matrix, but be a really useful tool to use to gauge the level of risk of your subrecipients. But the bottom line is the risk assessment has to be performed.
And Grant, as you were saying, the first point of the risk assessment is the prior experience of the subs. That's not just financial prior experience of the subs, but has this sub actually performing programmatically what it says it's going to be doing? Has it been doing it in the past? Is this new for it to be doing this type of a program? Does it have the capability and reputation for completing tasks that it has been consigned to do? So all of those things have to go into the matrix, not just, yes, they have a 133 audit done, yes or no type of a thing.
Yeah, the key to all this is really understanding your subrecipient. Sometimes I just deal with many situations where the pass-through entity makes an award, has very limited contact with the subrecipient, and not really involved with the work that they do. And that's not the intent of what the OMB wants you to do as a pass-through entity. They want you to be involved and really understand your subrecipient. So this is part of that overarching philosophy of how you more efficiently and effectively administer federal awards.
And so that's why the matrix can help, because you can say, are they poor, or are they good, or are they, you know, and it's because you're measuring things that aren't financial, so you have to put judgmental words to it as part of, and like you said, how well do you know this subrecipient and how much do you trust them?
Right. So now that you've performed your risk assessment, you have an understanding of your sub and you know what level of risk they are. The next step is to perform the actual monitoring procedures. So the objective of the monitoring procedures are to ensure that the subaward is used for their authorized purposes. The old guidance on subrecipient monitoring was somewhat limited, as Karen mentioned, was included as part of the single audit section. It's since been moved, and the new guidance provides more clarity on what subrecipient monitoring means. Specifically, the guidance states that you must perform certain things. You must review financial and performance reports and ensure that it's accurately and timely completed. You have to follow up to ensure that the subrecipient is taking appropriate action on findings. And if there are findings, you as the pass-through entity must provide direction on the correct course of action. And again, because the pass-through entity must perform the monitoring procedures, it's recommended that the monitoring be documented. So document what you've done to monitor the activities of the subrecipient. And really the key to a successful monitoring process is to really understand your subrecipient and be involved in the work that they do. So that means reviewing invoices, looking at timesheets, looking at the required reports that I have to file, because essentially you as a pass-through entity have a responsibility for their use of the funds. Site visits, I recommend. It's a very effective way to monitor the activities. It's not a requirement, but I recommend it. And if you do perform a site visit, make sure it's documented so there's support for it. I've worked with many organizations that provide training and assistance to their subrecipient. I find that to work really well because you're responsible for the use of the funds. It's worth your time to go out and train them and make sure they understand what they need to do from carrying out the award. Periodic status calls work well as well, but the point is you have responsibility for monitoring the activities of your subrecipient.
Okay, ready for polling question number 3? It'll be on your screen momentarily. Internal controls must be in compliance with Green Book and COSO. Is that true, false, or you're not sure?
Wow, look at that.
They're coming in.
Already 65% voted. They're still with us, Grant. They're still listening.
All right, remember you do need to answer 75% of the questions to get your CE credit today. All right, and we'll close the polls in 3, 2, 1.
So the
Came in pretty much split, 50% to 48% to 2% not sure.
Yeah, so this shows that there's still a lot of confusion out there as to whether or not controls must be in compliance with Green Book and COSO. So the correct answer is actually false. When this first came out, a lot of people in the grants community were confused about it, and based on what I've read is that your internal control should be in compliance with Green Book and COSO, but there's not a steadfast requirement that they are in compliance with Green Book and COSO. So again, use Green Book and COSO as a framework for how you should establish your controls, but technically we won't be auditing your controls to the level of COSO and Green Book.
Cool. So now we're going to go into some of my favorite areas, which are the cost principles. As Grant is an auditor and I come from the operations side of life, I spend more time with my clients going over how to spend your money and what is the right way to do it. And Grant gets to come along and make sure that we did it correctly. So that's our relationship. Of course, one of the biggest cost principles that there are, and this is again section 400, one of the soon-to-be favorites of everyone, 400 section 400 through 420 are the basic indirect versus direct. When we start getting into after section 420, 421 and on is basically the list of costs. Section 430 is going to be everyone's favorite area to read it thoroughly and get intimate with it, because that is how you pay people. Personnel services. So section 430 and 431 is fringe benefits. That's where I'm going to spend a lot of the focus. There have been some changes. A lot of people complained that, we're running our businesses, we're adults, we should be able to do things in a timely manner. I can't tell you how many times I've heard professors and or researchers tell me, I haven't filled out a timesheet since I worked at McDonald's and now I have to do it here. I don't understand this. It was very cumbersome on everybody to do it, and in the past you had to do it for many reasons. They have changed it. They want to reduce this administrative burden and the documenting of time and effort. They want to do it much more principle-based and much more of letting you as a entity describe what is best for you and your employees on how to do this. So as I said in the previous one, it had to be after the fact documentation. You could not use your budgets. It had to be a reasonable estimate of the actual time worked. Again, my favorite example is professors, and they spend so much of their time teaching classes, so much of their time doing research process, but those activities can interlink on each other, that they'll discuss things in class that they're doing research with, and their students will help along with research. So it's kind of a hard line to say which is class and which is research. And they would like to be able to say, 50-50 and such as that. You could not do that before. It had to be a reasonable estimate of the actual time worked. It had to account for all of the employees' compensation. It had to be signed by a supervisor that had firsthand knowledge of the employee's activity, prepared at least monthly, if not bi-monthly, depending on the pay periods, and as I said, coincide with the pay periods that you were doing. So the new guidance, it's much more comprehensive, and it wants you to include all the amounts that paid or accrued for the services, compensation that needs to be reasonable for the services being rendered. So again, we go back to that whole reasonable, allowable, allocable as being the overarching cost principles. Those are still here. They're still present. Is this a reasonable expense that you would, as a business, pay this person. And yes, there's still some subject to ceilings according to various of the agencies, and that's just always going to be there. So some of the agencies want to put a cap on certain of the researchers and such. This is key. Whatever you're doing to collect it has to conform to the written policy of your organization. Very key there. You can't just have one department documenting their time one way, one department not documenting any time, using it as a percentage of level of effort, and yet a third document just out there with no documentation whatsoever. Whatever your organization has decided to be the written policy for standardizing the documentation of personnel expenses needs to be written up in part of your internal control policies, taught to all of your people, and have them all following it standard. That's an easy thing for auditors to catch, that if you are not all consistently, if you do timesheets, if you do emails, if you do logging in, whatever it is that is going to be your organization's policy, you need to be sure that it's consistently done by all of your people. And that it, again, is supported according to the standards of the documentation for the personnel, which is Section 430. So some of the things that are in the Section 430 still go, like I said, it has to be reasonable, still has to be for a professional activity, has determining if it's allowable or unallowable time. There's also in there for special considerations, incentive compliance, if that's part of your standards. Then in the documentation itself, the charges that needs to be based on salaries and wages must be based on records that accurately reflect the work being performed. I'm reading from the regulation. Be supported by a system of internal control which provides a reasonable assurances that the charges are accurate, allowable, and properly allocated. They still want to be sure that what you're charging to the federal grant is the portion of the time that they're working on the federal grant. And if they're doing something that's being paid by another source of funds, their time is also being charged there proportionately, so that the federal grant will carry its portion and will pay for it, but you need to be sure that it's proportionate to that. It is no longer timesheets. There is nothing in there that says timesheets anymore. Level of effort that you need to be replaced the detailed timesheet reports, as it says, by what you think is best for that. You need to make that in your records. And item 2, it even says be incorporated in the official records of the non-federal entity. So whatever you're doing to document your timesheets has to be there, however your organizations choose. Reflect the total activity of the employee, encompass both federal and non-federal, comply with established accounting policies for your entity. So they want to be sure that whatever accounting policies that you're doing are in compliance with the labor laws of your state, of your country, of wherever it is that your entity is based. Support the distribution of the employee's salary, and it does say that budget estimates alone do not qualify as support for charges to the federal award. There has to be something that says how it was done, but it can be based on milestones, it can be based on performance, it can be based on accomplishing the task that was asked to do by the federal funds. So if you signed up to do research for this federal grant, then by showing that you have accomplished that research, that you've moved forward on this research, that you've met that milestone, or whatever performance is being requested, that is appropriate.
Just a quick word on timesheets. I know the guidance doesn't specifically require you to maintain timesheets, but I've been telling my clients is that if you have a timesheet system in place and it's been working for you, that's still probably the best way to monitor and track the time spent on a federal award. So as they say, if it ain't broke, don't fix it. So if you have a timesheet system in place and you like it and it's been working for you, that's probably the best way to continue tracking and monitoring the actual time spent and allocated to a federal award.
I agree with that, Grant, and especially if you've already been through, if your time records have already been through a DCAA audit, then you know that it will pass that and it can continue to pass that. So that can be part of it. Just because you have the ability to change, I would not throw the baby out with the bathwater, don't break it, don't fix it if it's not broken, all of those things. if your staff have been trained and know how to do it correctly, continue to do so.
That might be more relevant for organizations that are first-time recipients of federal awards and don't have a timesheet system in place. The new guidance offers you the choice of not establishing a timesheet system. You can explore some of these other alternatives for tracking your compensation. But if you have a system in place, I would recommend continue using it.
So going back to direct and indirect, the old circular used to be set up so that it stated that these were the cost principles. Appendix A was on the indirect setup, and Appendix B was the list of the cost principles. Not like we all have that memorized, do we, huh, Grant? So now it's section 400, and as I said, 400 through 420 is the indirect and direct Appendix A, as you will, and then 420 forward is Appendix B. So going back into the direct versus indirect, not a lot has changed there. There still is the definition of what is a direct cost and what is an indirect cost. Direct cost can fairly go straight there. Indirect cost, it's harder and needs some sort of allocation. What they have added to it is if you are a new entity, if you don't have the history or have a methodology of how you want to spread your indirect costs, they are providing a 10% modification to modified total direct costs. If the entity so wants to negotiate that can go into place. It's there for the entities that like it. Most entities that we work with, 10% wouldn't cover their indirect costs. So not a lot of, when it first came out that they heard that there was a 10% indirect cost rate, a panic went through the community. And don't panic. It's not forcing all of us to go to a 10% rate. It is there if you don't have any better leg to stand on, okay? But one of the new things that is also there is the ability to do a one-time extension without further negotiations for an approved rate for up to 4 years. So if you're pretty confident that your rate is strong and valid and you don't want to have to go through the year-by-year negotiating process, you can ask for this one-time extension so that you're locked and loaded into your rate for 4 years. But that does mean that you have a strong handle on your budget, strong handle on your costs and how they're going to be coming in, and a strong handle on how they're going to be doing for the next 4 years, that you think, I mean, if you're hitting, 15, 16, 20% year after year, and you know that you're going to hit that 20%, that's a relatively safe extension for you to take. And I know a lot of subrecipients are excited about the last which Grant has already talked to, that we are required, prime recipients of the award are required to do pass-through entities to let them use their indirect rates. And it can be one that you've negotiated with the sub, as Grant said. It can be the 10%, or you can genuflect and give them one if they don't know that. I know when I was working with a lot of subrecipients, this is a great area for teaching because not a lot of them understand the difference between direct and indirect. You can help them set up their budgets, help them evaluate, and to help them to understand that you want it to be something where you can collect the costs but spread it over something that makes sense, that the trigger is something that all the grants participate in. So if it's on labor, which I know is a very common one for people to do, total direct cost of labor, spread it out according to that, as long as all of your grants have labor involved in it. If you have some grants that are straight pass-throughs, that may not be the best trigger. But use a trigger that's near and dear to your organization.
Yeah, really the objectives of the indirect cost rate changes is twofold to me. One is to reduce some of that administrative burden of developing that rate. That's one of the areas that's always comes up in questions when I talk to recipients of federal awards, is how do you establish that rate, and they're having to spend a lot of time, a lot of resources towards developing an indirect cost rate. So that's the allowance of the 10% rates meant to reduce some of that administrative burden that can go into developing that rate. And number two, it's part of the goal to ensure that federal awards are paying their fair share of the cost recognized. So that impacts the fact that the pass-through entity has to allow subrecipients to use their rate to ensure that they're able to recoup all their costs that they incur to run these awards. So an important section, and I'm glad that it came out because it provides a lot of clarity and addresses a lot of issues that people had in the past with indirect costs.
It just says the same with the documentation of your personnel costs, the same as the documentation of your indirect costs. Just as Grant said, the federal awards will pay their fair share. They just want to be sure it's their fair share and that all awards are being treated consistently in your organization. Which leads us to polling question number 4.
Okay, our fourth question is a true or false. New grant recipients can elect a 10% indirect cost rate. True, false, or not sure? And as a reminder, you will receive an email after this webinar with the PowerPoint slides as well as a recording of today's webinar. You should have that within the next couple of days. Votes are coming in. I'll give you a few more seconds. And closing the polls in 3, 2, 1.
Well, 93% voted. And look, they were listening. 88% got it right. Yay! Yes, the answer is true. It is the may elect. It is an option, and it is only an option. It is not a must. It is a may elect. There is no must around the 10%.
All right, thank you. So now we will turn our attention to the single audit changes. And as I mentioned earlier, many of the single audit changes impact how we as auditors conduct our audits. So I won't discuss all of these changes because they won't impact you as a grant recipient. But some of the changes will impact you, and I'll talk about those changes in a second. But the goal of the reform surrounding single audits is that single audits are performed with a smarter risk-based approach. We as a firm conduct our audits of financial statements using a risk-based approach, meaning we identify areas we deem to be of high risk and we tailor our audit to address those risk areas. The single audit reform is very similar to that philosophy of auditing, of using a risk-based approach, so that we're refocusing our single audit efforts towards areas of greatest risk of waste, fraud, and abuse. One of the most significant changes to the single audit requirements is an increase in the threshold from $500,000 to $750,000. As it stands now, if you spend $500,000 or more of federal funds in a year, then you're required to have a single audit. With the increase in the threshold, it's increased to $750,000. And that's applicable, that becomes effective for years ending on or after December 31st, 2015. To be technical, the guidance actually states it's for fiscal years beginning on or after December 26, 2014, but I haven't seen any clients with a December 26 year end. Not sure why they chose that date. So for all purposes, let's go December 31st of your calendar year end. The first year single audit changes will take effect would be December 31st, 2015. For June 30 year end, it's June 30th, 2016. So that essentially reduces the audit burden for about 5,000 entities, but still maintains audit coverage for about 99% of federal dollars. So it really reduces the audit burden from smaller organizations. One of the other key tenets of this reform is to make better use of the single audit as an oversight tool. So the OMB is encouraging federal agencies to rely on a single audit. So if an organization has a single audit report, it's telling the federal agencies to not go out and perform their independent audit or assign other auditors to perform their audit. I've worked with many organizations where we come in, perform our single audit, and then the HHS or the Department of Energy is coming in, and other firms are coming in to perform similar to work that we've already done. So the OMB is saying, let's not do that. You have a single audit, let's use it as an oversight tool. But on the other hand, it puts a lot more emphasis on us as auditors to ensure that our single audits are being performed, carried out effectively, and are appropriately conducted. One of the other things that this guidance does is that it provides more transparency surrounding the use of federal funds. And it does that by publishing single audit reports online. So the public can have access to it and they can see where this federal money is being allocated to, how it's being used, who's using it, and whether or not they're using it for their intended purpose. Again, those are high-level changes. There's significant changes to this process that I didn't go over, but those are some of the more high-level changes that I wanted to touch upon.
So just before we go to the next polling question, so just as a note, so the change going from 500,000 to 750 does mean that you who do subcipients, that means the burden is on you to monitor them more closely up to that 750 mark, because they will not have a single audit done up to that 750 mark. So that puts the monitoring burden more squarely on the primes recipients. And also one thing I wanted to clarify about when I said that the pass-through entity needs to provide the subrecipient with an indirect cost rate. Yes, that means that if the subrecipient entity has their own, you can agree with them to use it. What the regulations were silent on prior to that was whether or not that you needed to allow the sub to use those or not. Some primes would say only direct costs were allowed as a subrecipient, and what this is doing is saying no. If your subrecipient is to be following the federal rules and regulations, it still has the ability to do an indirect cost rate. So we're ready for the next polling question.
We are. We'll see if they're still with us and paying attention. Polling question number 5. What is the new single audit threshold? 500,000, 750,000, 1 million, or 3 million?
Votes are coming in quickly. Yay, thank you.
All right, we'll go ahead and close the polls in 3, 2, 1.
So 92%, Grant.
Yep, that's absolutely right. The new threshold is $750,000. So we have about 5 minutes left, so I want to get through a few more slides and maybe save some time for questions. So then the next slide is just going over our recommendations and action items. Throughout the course of our webinar, we've kind of touched upon different recommendations, different best practice approaches. Just to summarize some of those areas now, if you receive federal awards, very important that you understand the changes. Hopefully this webinar was insightful. Read the federal guidance, call Karen or myself if you have any questions, but very important that you have read it and all key staff involved in the grant administration process has read the guidance. Make sure they're trained on the new guidance, involve senior management so that they're aware of the new changes. And I can't emphasize enough how important it is to have strong internal controls surrounding the grant administration process. So read through all your grant agreements, read through all your federal awards, identify the applicable compliance requirements, maybe set up a matrix of some sort, but identify the compliance requirements, and look at your controls and think about whether or not your controls are really established to ensure that those compliance requirements are being adhered to. So if you have controls, document them. If your controls are lacking, create controls, work with your auditors, work with senior management to create these controls so that you have documented policies and procedures in place surrounding the compliance requirements. And then with respect to the other areas we talked about, indirect costs, compensation reporting, subrecipient monitoring, again, read through the changes, make sure you understand it, and evaluate whether or not your organization is currently performing these items, and if not, then work with senior management and create policy and procedures to ensure that you are in compliance with these new changes. So just to wrap it up, in conclusion, we've talked about the significant changes to the administrative requirements and the cost principles. We focus specifically on subrecipient monitoring, internal controls, time and effort reporting, and indirect costs. These are the areas that we feel will have the most impact to grant recipients. And hopefully we've provided you with recommendations on implementing the change. Won't have too much time for questions. If anyone has any specific requests that you would like us to send on matrices or best practice recommendations, reach out to Karen or myself. There's a few questions. Maybe we can take one or two.
I think you've got time for at least one.
Okay. So one of them is, so we are a developer / general contractor awarded federal money. Are we a pass-through entity, and are our subcontractor or subrecipient? So it all depends on the nature of the relationship. So this is asking if you're a subrecipient or a contractor / vendor. all depends on the nature of the relationship, and it really boils down to, do you have leeway and discretion how you use those funds? If you do, likely you are a subrecipient. If not, then you could be a vendor. Example is if you receive federal money to paint a house. If you're a painter, you're not going to be subject to the new federal funding requirements. You're clearly a vendor or contractor in that instance.
So the definitions of contractor versus grantee still are similar to what they were before, and it is the nature of relationship.
Great. Well, thank you very much, Grant and Karen, for your time and expertise today. Thank you for all of us who joined us on the webinar. You'll see Karen and Grant's contact information on the slide in front of you. Please do feel free to reach out to either of them if you have any questions. If you submitted a question during the webinar and we were not able to answer it, we will follow up with you afterwards, and you will receive the PowerPoint and recording of today's webinar via email in the next couple of days. I'd like to thank you all for joining us. Reminder for those who would like CE, please do fill out the survey at the end of our webinar. Thanks so much, and we hope to have you join us again soon.